So to give you the highlight on the background, I think the access to finance is being one of the engine which is driving the economic growth in the recent world. So over the past 20 years, I think in Ethiopia, there has been a notable surge in the establishment and growth of the financial sector. For example, in terms of the establishment, when we look their capital structures and the financial performance and the bond or the transfer of the share among the shareholders, I think it is increasing. However, because of the absence of the structured secondary market in the structured or formal capital market in our country, due to that, I think the record which was shown in the sector is not as expected. So bearing this background in our mind, I think I will proceed to the objective of the assessment. The assessment have 4 objectives. The first one is access to capital. We assess the capital structure of the 3 industries and explore the financial performance or the profitability and understand the institutional investor involvement or presence in these industries and explore their share transfer dynamics. So when we proceed to the methodology and the data, we have tried to collect the primary data from all the private commercial banks and 18 microfinance institutions and all the private insurance companies within the time period of 2021 to 2022 and 23. In some occasions, I think, because we depend on the availability of the data for some trend analysis. So we used the descriptive trend and the comparative analysis to conduct this assessment. And when we come to the result and discussion part of this assessment, I think in the left side, the first graph shows that the capital structure of the bank, I think it is increasing. When we say the capital structure, I think we can categorize it into the total capital, paid up capital, and the authorized capital. So when we look at these 3 parameters, I think all are increasing within this period, especially when we compare the paid up capital in 2023 with the total capital of the total capital recorded in the banking industry. I think the figures are in millions. So the paid up capital is, I think, 61% of the total capital, which indicates that about 40% of the capital was covered with like that of debt capital mechanism or income return and other sources. So we have to be curious on that thing if the remaining proportion of the capital is covered by the debt capital. I think it is somewhat negative signal for the sector. So we have to investigate that further. And when we compare the authorized capital with the paid up and the total capital, I think that is the promissory one, because in the year 2023, the authorized capital is greater than both paid up and the total capital. So the sector can raise up to 275 million by using different mechanisms like issuing extra shares or bonds, and they can raise that because the authorized capital shows the maximum amount which are legally allowed to raise the capital. So in that sense, I think it is good to understand that when we come to the insurance industries, I think similarly, the three parameters are increasing within the specified period. So the change is, I think, in terms of the total capital, it is dynamic because it raised from 9 billion to 18 billion within 3 years. I think there are some contributing factors for that because of the adjustments which are taken in the regulatory requirement to meet the minimum total capital ratio by the sector was adjusted by the central bank. I think that is one of the contributing factors. And the growth which was recorded in the industry can be taken as one factor also. So having said this, I will proceed to the capital structure of the microfinance institution. I think the microfinance institution, since we are enforced to take the sample because of all the 47 microfinances were not responded our questionnaires by the time. So we took also only 18 among them. So everything stated here is the sample, not the population as it is. So, but I borrowed these figures from the National Bank reports, the total capital. So it is, the trend shows it is fluctuating. When you look the pattern within 2060 to 2023, I think the pattern shows it is fluctuating between the 9 billion and 19 billion. So the reason for the decline at this period is, I think, the growth of the leading financial institution to the banking sector, like that of the Amara Bidrina Kutawa and the Oromia Saving and Credit Institutions, Omo Microfinance, Shabal Bank, which was previously called the Somalia Credit and Credit Institution. So around 6 leading microfinances was transferred to the banking sector. So that brings a significant reduction in the total capital. The reason was that. And when we look the paid up capital and the authorized capital using the sample, I think it shows also the increasing. And when we jump to the financial performance of the microfinance and the banks, allow me to borrow these figures from the Central Bank report, which was published on the Financial Stability Report. So it looks like in the left side, the figures or the graph is the microfinance institution, a return on equity and a return on asset. The line with red one is return on asset, and the line in blue one is return on equity of the microfinance institutions. I think it is promising, even though there is some fluctuation exhibited in the return on equity of the microfinance sector. I think when we look the general trend of the graph, I think it seems increasing. So when we look, when I say the return on equity, we mean that the ability of the sector to generate the profit from the equity of the shareholders. And when we say that of return on assets, we are saying that the ability of the microfinance sector to generate the return or profit from the total asset. So the red one shows the asset management performance of the sector, and that one shows the equity management performance of the sector. If we compare this thing with the banking sector, I think when we compare the two red lines, I think the microfinance sector seems they are managing their asset better than the banking sector. I was surprised with these figures, so I don't know the reason, because it might be the complexity of the service which the banks are delivering, and the size of the loan also matters. So that might be taken as the potential reason for their mismanagement. So when we look the return on equity, it is fluctuating also. And the general trend shows the increasing trend. I try to compare this with the banking sector of Kenya. I think it is almost similar. Even though initially the size of the banks matter, the thing is to compare. So in terms of the size, the Kenyan banks are very huge than ours. So I think sometimes it is not appropriate to compare the, for example, we cannot compare the growth of the economy in Ethiopia and US in terms of just the figure only. So this thing give us promise in terms of attracting the private investors and the heads of the financial sector. When we look the financial performance or the profit metrics of the insurance companies, I think the parameters are not similar with that of the microfinance and the bank. They used the equity to liability, solvency margin, the combined ratio, and the expense ratio. The combined ratio shows that the figure is almost approaching to 100. So when the figure approaches to 100 and beyond 100, that shows the mismanagement or inefficiency in the sector, because combined ratio is the sum of the loss ratio and the expense ratio. So when these figures goes higher and higher, it implies that the sector is not managing their operation wisely. So the expense ratio also looks increasing. So we expect to decrease, because when it increases, its implication is negative. So I think that increment is not a good signal for the sector. So we have to be curious on that. Also, when we look the equity to liability, as its name indicates, equity to liability is equity from the shareholder over the total liability of the sector. Time 100 is the formula which we are used to compute this thing. So when the equity to liability increases, it indicates the good management or the efficiency of the sector operation. So it is, I think, fluctuating, even though the curve is very small. Of course, it seems steady. So since it is beyond around 50%, if we took the average, it is around 50%. It is not bad. So when we come to the share transfer dynamics in the financial sector, I think the number of shareholders is increasing in all the three sectors. For example, if we look the progress in the banking sector, I think Currently, it is around 413. The figure shows 400 something, and in terms of the value of total share in billions, it is increased substantially from 51 billion to 128 billion, which is very substantial increment. And of course, you have to curious about here. Nothing is adjusted for the inflation, so every figure is nominal. So we have to consider that even the figure looks some significant changes. And in terms of the value of shares sold to the institutional investors, when we say institutional investors, like that of the pension fund, the bank and the insurance by themselves are institutional investors, and other sectors. So their involvement is also increasing. The number of shareholders who transferred their share partly or wholly within the specified period is also increasing. And the number of share transferred, the number of shareholder and the number of share is different thing. The number of share is also increasing. So the value of share transferred within this period is also increasing. But in 2023, I think it shows some slight decrement. So I think the political instabilities and other factors can be taken as the potential reason for that. When we look in the insurance companies, the same is true. So the microfinance also shows some increments on those parameters. The conclusion is, despite the inflationary pressures, the total capital of the sectors surged from 112 billion in 2021 to 244 billion, which is very significant increment. It is in terms of the percent, it is around 117% increment. So that indicates the foundation of the sector finance, the capital status of the sector. I think this thing is the aggregate of the three sectors, this capital. So both paid up capital and the authorized capital in the three industries are increasing also. The financial performance matrix shows a slight improvement. So it needs some further improvement. It is not as such promissory, because even the improvement may be stemmed from the inflationary pressure. So we have to consider that. Moreover, the increase in the number of the shareholders, both in individuals and the institutional investors, shows the increment or the promise of the sector, or the attraction of the sector for the private investors. When we jump to the recommendation part, I think we forwarded some recommendation based on the finding to enhance or to improve the performance of the sector. I think enhancing the corporate governance is one of the pillar intervention, and enhancing the financial transparency and the performance. When we say the financial transparency, I think the reporting system has to be standardized, and the financial health measures or the profit metrics have to be wisely monitored and evaluated, and the educational and the awareness creation enhance the participation of the institutional investors, and actively engaging with the institutional investors by designing some tailored strategy for them, and offer incentives for those companies to enhance the corporate governance practice, such as tax break and regulatory benefits for adhering to the best practices and recognizing the company with a strong governance structure through award or certification, and reduce the listing fee, because we are almost about introducing the listing system because of the launching of the capital market and the Ethiopian exchange security. So the risk management enhancement is needed. The diversification of the product and the service is also highly needed to improve the sector contribution in the GDP. So the market infrastructure, which was supported with the technology aspect, is highly needed to improve this sector performance. This is all about my presentation. Thank you for the attentive following.